right, let's get on with it. How you doing? Welcome to Forex.Today. What's going on, fellas? G'day, mate. How are ya? How's your mum? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders, which is pretty good because there's not a lot of us globally. Wayne, it's lagging. Well, what can I do about that? Maybe refresh. Refresh your screen. Mohammed logs in and says, guys, is Wayne still weak? Dude, why do you log in once or twice a week and ask me the same question? Yes. Starting probably last night. Yeah. But anyways, hey, welcome. Today we'll cover technical and fundamental analysis. We'll go through the pound pairs, the dollar pairs, the yen pairs, whatever pairs you want. Just let me know how I can help. You are the boss. I am the servant in this relationship, so I am here to serve. Let me know how I can help. With that being said, let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble. Focus on the long term, never risk money you cannot afford to lose. So yeah, lots going on in the world. It's a very interesting time to be trading, and I think we have been blessed with an interesting world, right? I believe it's a Chinese saying where they say, you know, may your life be interesting. Well, we're blessed with having a very interesting life to lead and also to trade. So very good. There have been periods of trading where I've seen the markets move sideways for months. There was a time when euro dollar would move something like 6 pips during the Asian session. And that lasted for, you know, months and months and months, right? Just very interesting, right? Mohammed says he's just in confusion mood now. Then you need to develop a fundamental plan. It gets rid of the confusion. So Mohammed, literally flip a coin, heads or tails. Heads, you're a bear on the US dollar for the next 3 months. Or the other way, you're, just whatever, just flip it. Just make a decision. I know that's random, but at least you've made a decision. I think the most dangerous scenario is you trade without a decision being made on whether you're a bull or a bear. And you will get slaughtered because you're either a bull, a bear, or a pig, and pigs get slaughtered. So flip a coin. Or hopefully you take the fundamentals course or the macroeconomics course, right? There's 2 big courses at FX Bootcamp. One is macroeconomics and the other one is on central banking. Both are probably 12 hours long, if not longer. Actually longer, right? Anyways, once you take those courses, you'll be able to make a decision. Simple enough. So I don't care what your conclusion is or how you get there, but you got to make one. So let me get off the camera. I want to tell you that I'm here to serve. I do these webinars every single day. There's no financial cost to you for being here, but you know, there is a responsibility that comes with these no money webinars. There's a cost. One of them is you visit tradersway.com and open up a demo account. Okay? They're part of our community. They want to earn your loyalty and respect. You need a foreign exchange broker. Give them an opportunity to earn your loyalty and respect. It comes with these webinars. Again, there's no monetary requirement for being here, but there should be some sort of pay it back idea. Go to tradersway.com. Also, there are free resources linked below. My book is linked below. My paid training course is linked below. My chart templates are linked below. So if you need some help, the resources are in the description below the video. Go get what you need. And you'll find that some of them do cost money, but not a lot. Okay? I think you'll be amazed actually how affordable even the paid things are. Okay? But there are also like chart templates, $5. All my training courses, $88. I mean, dude, it's ridiculous. So the links are in the description below. Theta, Wayne, you believe Fed will hike one more before even the next meeting? Well, first of all, I don't believe anything. I only have a conclusion. And I have not heard anything from the Fed about a surprise rate hike before May. So my conclusion, Theta, is absolutely 0% chance. Okay. Well, thanks for trying, Nurko. All right, so where are we? What are we doing? You guys see charts, right? What am I on? I'm pound. Okay, we're looking at pound. Let's take a look at piggy. Okay, triple bottom might be turning into an opportunity. The only thing is I'm bullish on pound. Okay, I'm bullish on pound for a little bit, for a while. Bullish on the pound. But commodity currencies are just kicking butt right now. So this looks like the trend is bearish. Okay, we're caught in a range, as you can see, and it looks like it's going to try to make a lower low, lower high, lower low in favor of New Zealand. But yet, I'm bullish on the Great British Pound. So it's kind of interesting, right? Just shows you how unbelievably bullish Kiwi is. Okay. Your customer says, war adds to confusion. I just read some prediction of oil. Stop reading that garbage. But anyways, if you think oil's going to 300, then buy it, dude. It's only $1.20. It's only $1.15. Buy it. What's the problem? But do not read other people's predictions. Absolutely do not. Okay? That sounds like someone that's trying to send out a press release and get some traffic. Why not 1,000? Okay? If it's true, will this change plans considerably? Of course, but that's not likely. It's almost 0% chance. But if you believe it, dude, buy it. As soon as you can, you buy it. Okay? But you should do your own analysis. Okay? So let's go on here. Remember, I'm not teaching you my point of view. I'm just teaching you how to do analysis. Okay? So don't listen to anybody else's opinion on point of view. I'll just teach you how I get to my conclusions, and you can take what you need, man. Take what you need. All right, so this is Great British Pound versus Singapore dollar, and this one is starting to get up. You see technically on a 4-hour, we have breached and made a higher high there. The next challenge is in this zone. So you'd probably expect something like this up, and then probably a down, and then up in April. Okay? So again, I'm just showing you how I look at technical analysis. Okay? My trade is down here. I'm at break even, and should be up. Okay, it's continuing up. So I'm in at I think it's 178. 178. Oops. And we is at 79. So I'm up about 150, 160 pips. So it's a good start. Okay? As you can see, down, up, consolidation, up, buy, and this is the first real breakout, okay, above this zone. Cool. So I'm going to let it run. Now, this is a 4-hour chart. So on smaller time frames, like 1 hour and 15 minute, you'll probably get little dipsy doos like this along the way. Just recognize that you'll get your little 3-wave correction, and then we'll wave it up there if you're an Elliott wave dude or dudette. Gee whiz, Papa Smurf. Okay, so we got that one going for us. That's great. All right. You can see all the ranginess that we've had here for a while. And what this means is this last move that occurred is pretty important. Okay, could be pretty important. Diego says weekly M4 already. Right, for sure. Okay. I'm looking a little further out. But yeah, I mean, is that going to be important? Probably, right? Okay. Sweet. Sweet. So that could, right? Here's one that we looked at last night in the day trading group. And oh my God, look at that take off. Great. So that one's moving. I'm in at 122. And now we're at 123.50. So that's also up about 150 pips. From here to there and there. So obviously I got to get through this, right? I've cleared through this challenge. I've cleared through that challenge. And we'll probably use this as a support. Try to get back up here. And all that does is get us a double top. Ooh la la. That can be a challenging double top. Okay. So we'll need some Swiss franc weakness as well as pound strength to get through that top. Okay. One of the things we were talking about in the day trading group on this trade was being one standard deviation below the mean. I think it was Johnny that brought it up, the use of multi-time frame deviations. And we specifically talked about this one being on this time frame down, but on the bigger time frame up, and that this looked like a good zone to consider buying. And we were right in here, and it was, yeah, faux show. Yeah. So you can see Johnny is, he's getting good. So anyways, look at that. Nice little trade. Probably may, I don't know about probably, but I'd look for something like that. Good morning, Meta. Cool. And we are laughing too because I'm in here and there's another boot camper that's in down here. And we're like, oh, I think it was Lucas. Lucas has got the best trade on this one. He picked that one prime, man. Yeah. Okay, so everything is right in the world. And this one also consolidating, which might give us opportunity. Insert indicators, custom, price action pivot points. 3, 2, 1, hit it. So you want to have this turn positive. Okay. If that's too time sensitive, if you're trying to look further back, not a problem, man. You go to indicators, price action pivot points. This is at 55. Okay, you can go to 233, for example. Yes, that is a Fibonacci number. If you got a problem, yo, I'll solve it. Check out my hook while my DJ revolves it. Mohammed believes that Great Britain does not have a good economic outlook. All right, then you should not buy it. All right, so anyways, that's that. This is where we're stuck on this one. Cool, you can have it if you want it. Let's zip over to the dilly dollars. What's up, Richard? Well, you have to understand, Richard, even in my live groups, I'd never tell anybody what to do. And so a lot of people just fail miserably because they're looking for me to tell them what to do and make money. One of these things like, Wayne, if your service is good, I'll make money so I can afford to pay your fee. You know, when I went to Harvard, I said, you know what? John Harvard, if you're such a good school, I'll make enough money while attending school that I'll more than be able to pay for the fee. I don't know. It's so silly. So what you find is that the folks that stick with it and actually do the work, and we have a really cool crew, man. It's not a big organization, right? This is not me pitching garbage for the masses. It's a really hardcore team, and people put in like serious effort. This is legit, and people are getting pretty good. People are getting pretty good. They're right. You can see it. They're growing independent. They're building businesses and future empires. It's cool. It's really cool. We got something good. I'm telling you. All right. Yeah. All right. So we go in here. Harvey says, yeah, my order at 110 got hit. Actually, my order was at 109.78 or something. It was right there. So I'm in on this, yo. I'm in on this one. Yeah. Yeah, get a signal service and I can get a Lambo and a Rolex. Well, I have a B&R. That's pretty good. My Rolex is somewhere. I don't even know. Where is it? I haven't worn this in so long. I think it's actually one of the nicest Rolex ever. Look at this. There you go. It's so hard. Maybe I'll turn this off. See if you like this. It's the least flashy Rolex ever. Isn't it beautiful? It won't focus. Look how nice that is. Isn't that cool? Problem is the band is broke. And they're like, yeah, it's $3,000. I'm like, what? So anyways, it's set there. That's what most Rolexes do, by the way. So if you ever think owning a Rolex is the epitome of being filthy, stinking rich, what happens is it sits in a box somewhere. next to your Harvard class ring, and doesn't do anything. It doesn't do anything. It's really silly. Although that probably went up in value. So those things end up, and I know you're joking, but yeah, a Lambo is probably the worst car you could possibly buy. Rolexes are nice, but they're quite silly, and at some point doesn't make you feel any better. But yeah, but I do like that one because it is elegant. And has anyone been to Piccadilly Arcade? There's a statue out front, and it says something like, oh, I don't remember how it goes, but like, to be a distinguished and elegant gentleman. It's something like someone wouldn't notice you. You know? Something like that. And that's what I love about that watch is it's a beautiful, elegant watch. It couldn't be more simple. It's actually small. This is huge, right? So everyone notices this. But no one would ever notice it. And yes, it's a beautiful, classic, handmade watch. Piccadilly Circus, sorry. And so anyways, it's one of those things you'd never notice it. And the only Ferrari that I've seen that I really sort of fell in love with in an instant, I was a young man in the Silicon Valley, and I believe I was at the Churchill Club. And I remember it for a couple of reasons, but that night for a couple of reasons. But one of them was I was standing in the parking lot thinking about leaving, essentially wimping out, actually. And it was interesting. I saw this car, and I know a lot about cars. I've owned a lot of cars, more than 100 cars, actually. So I'm in the parking lot, and I'm wimping out. And I'm like, what the hell is that? All of a sudden, like, I went from thinking about me to, what is this car? It was brown, obviously European, obviously older, from the 60s or 70s or something. I'm like, what is this thing? And I might have been a 4-door at least, or maybe a 2-door, but like with a decent sized back seat, like one like an adult could actually sit in. And I look at this thing, I'm like, what the hell is this? Brown with sort of sand interior, and it was long and sort of slopey, and I'm like, it's not a Jaguar, and it's not. It kind of looked like a 60s Jaguar, but it was a car from probably the late 70s. What the hell is this thing? And I go around to the front of the hood, and there's a prancing pony on it, and it's a frickin' Ferrari. And I'm like, that is elegant. And it was just a family car, I guess, right? And it was, yeah, a Ferrari with a back seat. Again, it might have been a 4-door. And I'm like, that's cool, man. That's nice. And I always thought, like, that's it. That's how you do it. Okay? No one would ever notice. I thought, that's classy. Yes, it's a Ferrari. Yes, it's probably a V12. And nobody would know. Except you. And I'm like, that's classy. Mike says, what's the reason yen pairs are going to gain strength soon? I don't know. Don't rely on me. Don't do anything because of me. I'm just teaching you how to maybe have a plan or a bias and then use technical analysis to confirm or deny it. Maybe I'm just pulling on your strings, Mike. Maybe I'm just trying to teach you to say, look for it. Maybe it doesn't exist. Maybe I say, look for it, Mike. And then it shows up and you trade it. Cool. Which means if I planted the seed for the bias, at least now you got experience practicing, waiting, and confirming for the bias. And then you trade it and it works out or it doesn't work out. Cool. But at least now you've learned patience and discipline, malice aforethought, if you will, waiting for it to set up and then confirming that it's set up and then taking a shot. And I've taught you that. I might be making the whole dang thing up. That's why you shouldn't listen to me. Okay. Cool. So, this is a trade that I set up and I intend on holding it bare minimum to 1345, but I'm in, I think 1370, 1380 or sorry, 1080. No, sorry, 980. I'm in at 109.80 and I might hold this to 120. Your customer says, I thought seasonality was the end strength this time of year. I don't know. Maybe I made that up. Okay. If I said something like that, that's my alpha. Maybe I've done the research. I've looked at the charts. I've made conclusions. I can also adapt because we don't trade the model, we trade reality. Okay? And the model is based on average, and we know there's never an average. Right? Now, Richard says euro going down. Yeah, that's fine. I don't care. Okay? I won't lose money. So, guys, when it comes to whatever your plan is, whether you call it seasonality, maybe it's your monthly plan, maybe it's your weekly plan, maybe it's your quarterly plan. Okay? The idea is you develop a plan, and from a plan comes a strategy, and from a strategy comes trades, which are technically based. Okay? So I'm trying to teach you to frame what you do through a lens. Otherwise, most of this is just random because you're random. You have to understand, if Forex trading seems random and chaotic, it's because you are random and chaotic. It's not the market, it's you. Oh, how dare you, Wayne, insult me like that? No, it's you. You're random. You don't know what you're going to do, so everything seems out of control. Okay? So anyways, I'm just trying to be a good coach. How do you define the longer term? Any way you want. Okay? Is daily good enough? You might want to go weekly. The problem with going weekly and beyond is that in a situation like this, you only have technical analysis. Okay? So what's the problem with this? Let me get rid of that. What's the problem with this setup here? If we look this far back, the only thing that you see here with technical analysis is COVID. So you look at this, you're like, this is what is happening. But you're also looking at how the market behaved while COVID arrived and got worse and worse and worse and worse. And in China, things are bad. In America, it's over. The slope is down, but yeah, you're looking backwards. You're looking back in time. That's not where you develop value. You're supposed to be a value creator. If you can create value by predicting the future, people will pay you money for the value you create. You can't look back and say, well, you know what? The next 2 years is going to be just like the previous 2 years. Really? So you think the Fed cutting interest rates, doing quantitative easing, buying mortgage-backed securities is what's going to happen over the next 2 years? And you say to me, no, Wayne, no, that's not what I'm saying. And then I'm like, well, what are you saying fundamentally? If the Fed's not going to do quantitative easing, cut interest rates, and buy mortgage-backed securities, what are they going to do? Then you say to me, well, Wayne, I think they have stopped quantitative easing. They're raising interest rates and they're going to sell mortgage-backed securities. And yet you're going to look at this chart and say the Fed is doing the exact opposite of what they did in this time, but you think this is going to continue down. What kind of logic is that? You think the Fed's going to do the opposite, but this euro dollar is going to do the same. Well, good luck with that. You could be right. I don't know the future. Okay? I don't know the future. But that doesn't sound right to me, but maybe that's me. I think if the Fed was a part of this move, and now the Fed has changed directions completely, then maybe it'll do that now. You see my point? You might disagree with me, but I think you might see my point. Okay? So anyways, this is interesting to me. Wouldn't that be neat? Okay, that's going to take months to develop. Cool. Okay, so do you see why I do stuff like this? Again, this is what we did in the day trading group. Okay, so on Sunday we were here, and you know what we said in the day trading group? We need it to come down so we can buy it. Genius, genius, genius. Thank you, Darko. No. Richard says, Wayne, you're trying to pick the bottom. No. Picking bottoms is a strategy that stinks. Now think about that for a little bit. Picking bottoms is a strategy that stinks. Okay? So no. But I am starting a process. And you could argue that the bottom was here. Then we challenged. Then we have a higher low. Then we challenged. We have a higher low. And the next one will probably be a break, pullback, right? So higher high, higher low, new higher high. And this is right. So euro dollar, again, I'm at 109.80. So I'm in the second wave, even the third wave. I'm in right here. So which time frame is best? All of them. Mohammed, everything. Every single time frame is important. All right, Milos got the joke. Okay. Take a look at the yen pairs. If you got a problem, I'll solve it. Massive moves last night. Just redonkulous. Good job, yen. But one could be the end of the yen. This is the end. Okay, check this out. Let me do it this way. Check this out. Projected top for the week. Projected top for the week. Projected top for the week. This one can go a little higher. This one can go a little higher. Ooh la la. Yeah, yen going to the moon. Interesting. Abdullah. Abdullah is losing hair at 27. You look like the King of England. Huh? Yeah. It's good at Halloween, though. Right? I walk into a Halloween party. I don't even have to put on a costume. People say, oh, Anderson Cooper. Tiago, I wouldn't say it's a hedge, no. Yeah, Raymond's like, hey, the Fed raising interest rates for the first time in 3-4 years. Yeah, that's a play. Okay, but it's not that they're raising, it's that we have economic conditions that would require a raise. Okay, people always kind of get it backwards because it's taught that way in school. Because the central bank raised interest rates or lowered interest rates, but that's not actually quite true. The central bank lags. So it's the economic conditions that force the play. Okay, so anyways. Does anyone remember when I said sell US dollar for 5 years? See, that to me is the turning point. Does anyone have a rough date? April 2020. That's exactly correct. So everyone's coming in. Wayne, what, are you still want to sell dollar? Dude. Right? I made that decision long ago. And I don't go into panic mode when it ain't working. What you do is you adjust. Okay? And this is where, for me, seasonality comes in. So we were in this period right here. I said, that's it. I got what I need. Okay? Then what happened? Everything was golden until we got hit by Omicron again, right? So we started the upward process. We got the end. Okay? So this drop here makes sense. This drop here makes sense. Okay? If you guys recall, right in here, I stopped selling US dollar, took profit, and went on vacation. I was at the beach that day. Okay. Then this came down, which was absolutely totally normal. And then, boom, blindsided by Omicron. Okay. And then this part here is normal as well. So now the next sort of normal is what happens next. And I think the next new normal looks like this. Okay? Maybe not for this long, but at least for this period of time. That's all I'm predicting. I'm not predicting the end of the world or you know, the world being saved. I understand we live in a complicated time. Okay, one of the things I gave the swing trading group, I think this was 2 weeks ago, I gave them an overview of the rest of the year based on my base case. Now, I did some research going into this, so it's not just a random opinion, but we did a base case. Now, you could also do best case and worst case. And so I gave an example of what these might look like. But I went month over month over month over month, what I thought would happen this year. Okay? And then from there I said, based on this base case and things like the price action of the year, which I outlined, I said, just assume I'm right. If I'm right, because I use the S&P 500 as a benchmark, I said, if the S&P 500 behaves this way, give me the trades on things like euro dollar or Aussie dollar or pound Swiss franc. I'm like, I don't care. Just if this is what if this is a scenario that is plausibly going to happen, take me through the rest of the year. Okay, the swing trading group is $99 a month. And if you're not getting that kind of experience, you're going to stay an amateur forever. You're not even doing the right kind of work. And I would find that frustrating. It'd be like a scientist asking all the wrong questions. Okay? You got to up your game. Let's take a look at Aussie. Aussie had a nice break. Okay? Now we consolidated up in here, consolidated. We talked about this one being much more bullish than the other pairs. And I thought if euro dollar was going to come down, maybe this one comes down and tickles this. Euro dollar did come down. This did not. Okay. Now, the interesting thing is I was trading this last night on a 5-minute chart. And there were times when it looked like it wanted to go bearish, right? Like, I don't know if it was this big candle or if it was this sort of move. I don't know the server time by memory or anything. But it was interesting because I got what I needed on euro dollar and this didn't budge. It just waited. Then euro bounced and then this popped, just gone. Okay. Yes, it could, Pete, for sure. Remember, in a model, okay? Remember, what is a model? My model is 20 years of average. Okay? So if we go into March 2022 and the Bank of Japan stimulates, will that be would that have congruency with the 20-year average? Okay? No, No, it would not. Because that is not a normal thing. So if you're trading a normal model, your job is to say, well, I have a normal model. And then you have reality. So you take the data from reality and you look at the model and say, well, the current model wouldn't explain stimulus, and stimulus would be a good thing. So you'd put this out here and create a best case. Yen stays weak longer, and the S&P 500 rallies, which are both risk on. So you're like, that would be the best case. We're in a risk on period, and we got stimulus out of the Bank of Japan weakening the yen. You crush it for an extra 3 months, and then you move on to the next part of the year. Okay? That's what you're supposed to be doing. TT says weak yen is good or bad for Japan's economy. What does the Japanese economy do? What does the Japanese economy do? Thank you, Richard. TT says thank you. No, I'm talking to you, TT. What does the Japanese economy do? See, I can answer your question, but if I answer the question the way you framed it, you still wouldn't understand. Yes, export. Okay? Cool. So, they want exports to be greater than imports. Okay? They want to export. Okay? So, if the Japanese yen, okay, is expensive, it means you have to decide, do you want to buy a Sony TV for $3,500? Or do you want to buy a Vizio TV for $1,200? Which one do you think is going to sell better? Which one do you think will sell better? The cheaper one, probably. So one of the issues is in deciding Japanese products versus Chinese products, China also exports. Okay? Exporting countries want cheaper currencies because if the yen gets expensive, Americans have to buy yen to buy the Sony. So you need more dollars to buy Japanese yen to therefore buy your Sony. So if the yen gets expensive, to an American, the same TV is now $4,000. And they're like, forget it. Why would I buy a Japanese TV? I can get one that's pretty close, as good. Okay? So you buy the Vizio. So right? So when the yen goes up, exports fall. Okay? Here's another classic example. What can you get for 40,000 US dollars? I'm just throwing out a number here. I'm not sure. You can get a Honda, or you can get a Kia. And you're like, well, they're about the same. Maybe Honda has a better name, but the Kias look much nicer. Hondas are boring. The new Kias are nice and fancy and stuff. Then the next question is, you show up to each one of these dealers and you look at $40,000 and you get what? A Honda Accord? A nice one though, right? And you get in and it's like, yeah, it's good and it's reliable and all that kind of stuff. But then you've been reading that the Kias are actually very, very reliable. The fit and finishes are very nice and stuff. The ratings are really good by Consumer Reports. Hondas are nice. You know that. There's no risk. But they're kind of boring and whatever. And you can't tell the difference. Is that a 2022 or is that a 2018? You can't tell. They look exactly the same. You're like, I don't know, 40 grand and get a Honda. All right. And then you go to the Kia place and you're like, oh my God, you get one that's one size bigger. Okay. So instead of an Accord size car, you get, I don't know, a Lexus. So your Kia looks more like a Lexus than the Honda, right? It's a little bit bigger. It's a little bit nicer. They're a little bit more exciting and all that kind of stuff. And you're like, there's more value here for the Kia. And part of this might be just Honda, but also what if the yen was expensive relative to the Korean won? Okay. So what I'm getting at is if yen gets expensive, because, you're 40,000 in terms of Japanese car or in terms of Korean car. You could probably get a nicer Kia for your 40,000. Part of that might be Japanese yen strength. So you'd go with the Kia and you end up actually selling your US dollar to buy South Korean won. So when Japanese yen gets expensive, to foreigners, Japanese products get expensive, and therefore consumers tend to buy the better value. And part of that value is the better exchange rate. So as the yen goes up, the exports from Japan fall, and that's bad for Japan. So the Japanese actually want a weak currency. They don't want a strong currency. Okay? So Japan wants this to go down. So exports go up, or let's say in terms of dollars. So now if the Japanese yen loses value and an American goes to the lot and can buy a Lexus now. My mouse ain't working. Lexus. Sorry, that's Toyota, isn't it? Okay. So now they go to the Toyota lot and they're like, you know what? For 40 grand, I can get you in a Lexus. And you're like, what? And they're like, yeah, better engine, better suspension, more sound dampening, better quality leather, better entertainment system. And you're like, really? Really? You can get me in a Lexus for 40K. And you're like, hey man, the Kia is cool, but I get more respect in a Lexus. My mother-in-law is going to be impressed. I mean, it's weird why people buy cars, right? Right? So anyways, you're like, okay, so now I go with the Lexus. And part of it is you can get yourself an Lexus because the value of the Japanese yen has fallen. And now Toyota, right? You sell US dollars to buy Japanese yen, and Japan sends your order to Toyota. Toyota grabs your Lexus, puts it on a ship, and sends it to you, or at least the replacement for the car that you bought. You understand? So Japan wants big exports. So to get big exports, they want a weak currency, because Japan has to compete with South Korea for cars, Germany for cars, probably not China. Okay? So the value of the yen, okay, versus euro, okay, what is it, Korean WN, Korean won, are probably a big deal, right? Okay, you see what I say? You see what I mean? Well, of course they import too, for sure. But it's more like, what do they do with their money? So it comes down to, I said, what does the economy do? That what I'm referring to is, how does Japan make money? Now, what they spend their money on, okay, is a whole different issue, and that's oil. Okay, so one thing that could be happening is Japan is importing a lot of oil and exporting a lot of yen. What are they? Okay, because they have to convert their yen to dollars and then their dollars into oil or nat gas. Okay. Yeah. Do they want to do that? No, I don't think so. And it seems like they've taken down some of their nuclear power again, so they have to replace that with, you know, earthly sources of energy. HH, I believe it's BS. Okay. HH, if you're interested in the real estate industry, do some research, like maybe buy a book or two on the real estate market cycle. Okay. So I've taken 2 graduate level courses, or was it 3? At least 2. I've taken 2 graduate level classes on real estate. And there is a cycle to it that's tied to the economy and even micro economy. But it, you know, when you incorporate things like, let's say, the employment situation of the economy, that's obviously important. And what is that tied to? The business cycle. Okay. And there's a relationship between the business cycle and the real estate cycle. They're a little bit intertwined, not perfectly, of course, but a little bit. And what you also want to look at is not rents, but instead vacancies. And inside of that, there's a cycle. So when you do real estate, in particular modeling of the real estate market, you should draw yourself a grid. No, I'm not going to do calculus. And sorry, my mouse just refuses to draw straight lines today. So let me cheat a little bit. Okay. And you get something like this where the bottom of the cycle, rents have come down. Okay. Are starting to climb. Are going higher. Okay. And then if you take that, you have rents. And you put this also into vacancies, right? Rents, and I'm not going to do the whole thing for you because it's my information. I paid $15,000 for this information. Okay. Rents versus vacancy. Okay. And you start to get some pretty logical information. So most of the time when people come out and they're like, oil's going to $300 or the housing market's going to crash, it might be true, of course, but it's ridiculous. Most of the time they actually have no idea what they're talking about. But you only have to be 1% smarter than your audience, right? So maybe they're selling a course, maybe they're selling a book, maybe they're selling, they want to be famous, but this idea of a crash is coming will always work. Okay? Okay? People have predicted 15 of the last 9 recessions. So instead, intelligent people analyze reality, and then from their research, they have conviction for the plausible future. And then they continue to analyze to discern whether they're on course for that plausible future. So to know where you are in the cycle is 1,000 times more important. So let's say we could be here, or we could be here. Whatever your analysis shows you, okay? Your analysis, right, will show you, but you will discern whether you're here, here, or here, and it'll tell you how many more years you have until the crash. So your people, your whoever, these people, I don't listen to people, so these people, I don't know who you're talking about, for a housing correction over the next 2 years. They say you're here then. So do some research on vacancies and rents. Remember, rents are not the thing to be looking for. Okay? In economics, we have a term for this. Okay? We say prices are sticky. Okay? So people will tell you, keep buying real estate because rents are high. Stop listening to those dummies. They literally have no freaking idea what they're talking about. Rents are up, so keep buying. Those guys end up being broke because they might have made a lot of money here. They'll keep buying up here because rents are high, and they will lose every single penny they own. That's not how you do it. Yes, Colin, you have to join FX Bootcamp for a whopping $88 a year. Yep. And then you can upgrade. Okay? So anyways, pay attention to where we are. Figure out where you think we are, but pay attention more to vacancies. So if prices are sticky, then rents are lagging, and people will buy at the top. Okay? Yeah. So where should you be a buyer? Here. Now, you will see that the opposite is right. You might be looking at rents rising, but what does that tell you about vacancy? Okay, you see? So the timing of all of this is really cool, but you got to have the knowledge. I get upset when you guys listen to people that probably don't know what they're talking about. And it's so easy to start a YouTube channel, buy yourself an $80 microphone, and you're in business, right? Now you're an expert. Oh, you know what? Like, people ask me, like, is a Harvard degree worth it? It's a credential. Okay? So whatever guru is on YouTube pitching how to get rich quick on real estate or in Forex or in Bitcoin or in trading stocks or trading options, you can say, okay, that's really good. That's good. That's great. What kind of credential do you have that would help me, believe in your credibility? That's what a credential is. What kind of credibility do you have? Okay, I have multiple degrees from Harvard, studying this stuff, economics and finance. I'm an expert in investing. I worked as a venture capitalist. I studied venture capital at Harvard Business School. I studied real estate at Harvard as well, multiple classes from, read the literature, read the books, passed the tests. Okay, cool. Does that mean I'm smarter than the other people? Maybe, but that's the thing, maybe. And that's better than just some guy on YouTube. Look, I'm a Forex trader. I'm on YouTube. Woohoo! Right? All right. Cool. That's great. They're good YouTube Forex traders. I hope they do well. I hope they teach you good lessons about being patient and conservative and disciplined, and show you how to educate yourself so that you can develop a fundamental and technical bias, understanding both macroeconomics and monetary policy. I hope they teach you that stuff. And I also hope that they don't buy a yellow Lambo and instead invest into their children and their home and their retirement accounts, and understand wise money management and are good role models to you and their children and their neighbors. And if they can make their children state champions in engineering, even better. But all of that should show you how they think and act and behave. Are they investing into their future, or are they just trying to make a quick buck today? And I don't believe in quick bucks. Huh? So I'll get off my high horse now. Cool. And oil's Oscar Mike again. What Pakistani dude? I don't know any Pakistani dude. Although I like Punjabi food, and there's a slight difference between Indian Punjabi and Pakistani Punjabi food. But yeah. TT asked, does it mean that expensive oil is harmful for the economy? Well, let's say you have a fixed income, and because of that, you have a budget, and now you have to pay twice as much to put gas into your car. But you don't have more money. So you have to stop paying your phone bill. Well, you kind of need your phone. You buy less food from the grocery store. Well, there's a substitution effect. So you stop buying steak and you buy more chicken. Okay? And it's still not quite enough. You're like, you're still spending too much on gasoline. You're driving to work. You still get paid the same amount of money. And a month or two goes by, and this is starting to cramp your style. And you're like, you're spending too much on fuel. You've already cut back on food. You can't cut back on medicine. You need your phone. You need your insurance. You have to pay your mortgage. So now you get to a point where, well, should you sell your house? No, that's kind of drastic. But maybe you should get a more fuel-efficient car. So you decide to give up the Porsche, and you're going to buy a Kia. Because now you can save 3/4 of your money, take 25% of your Porsche cash, buy yourself a Kia, and it gets, right? My wife's BMW gets something like I just filled the gas the other day, and it said something crazy like, you have to, you only have like 590 miles to go before you have to fill up your gas tank. I'm like, mine doesn't go 200 miles. It was just amazing. I'm like, oh my God, you get 500 miles on a tank of gas? Like, oh my God, I get like 180. So anyway, so I can get the Porsche, I can buy a little BMW. And get 40, 50 miles to the gallon. Cool, sweet. See? But I have to make decisions, and there are trade-offs and compromises. And just so you know, the study of economics is the study of scarcity. And because of that, you'll have to make trade-offs. It's a social science. It's a really cool thing to study, actually, because you're like, because of high oil prices, you sell your Porsche and buy a little BMW. Yeah, it's weird, right? Because the scarcity here is you don't have more money, but your costs have gone up. So something's got to give. So maybe you sell the Porsche and buy a bicycle. Maybe you quit your job and get one closer, but you have to give something up because the scarcity is the amount of money you have, and you must make decisions. So Jim won't buy a BEV. I don't know. I wouldn't have a problem. Not a problem at all, in fact. But it's not criticism one way or the other. So anyways, I think I'm spent. I got things to do today. Got to get me some more trades. Got a couple of meetings today. I got a photo shoot at Playgirl. I'm supposed to keep that on the download. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Unless you're in my day trading group, and I'll see you tonight. So once again, peace on earth. May the pips be with you. May our profits be above average. That just happened. No.